Okay, hello everybody. Welcome to Korean Atlanta Mentorship here with another Velocity Banking video. And it's a debt-free fiesta. I just made it up, debt-free fiesta, because we're going to pay off debt. And if you don't know who I am, I paid off a mortgage in 2 years and 9 months. I got to get the Vine boom sound effect every time I say that and play it. But yes, I did. And then, recently I've just kind of been laying around my house, sleeping, and then playing some Zelda. I recently beat the Ocarina of Time, and then my next game is going to be the Wind Waker. They actually re-released the Wind Waker on the Nintendo Switch 2 um, GameCube, whatever it's called, service. And so I've never played that game before, so I'm kind of interested. It's been a fun 10 minutes since I played. And why am I talking about this and just kind of wasting time? It's because that's what happens when you pay off a mortgage in 2 years and 9 months. Boom. Okay. All right. Well, so what are we gonna do today? I'm just gonna waste time, blab on and 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 on, because that's what happens when you pay off a mortgage in 2 years and 9 months. All right. And I'll play some Zelda a little bit later. Okay, so let's go ahead and get started with velocity banking. First step is creating a budget because your budget is your debt attack plan. So, easy steps: income, expenses, savings, and then the next thing you have to do after you done this part, which is income, expenses, and savings left over, is you create the budget. And then the budget is essentially, I'm sorry, not the budget, an expense breakdown, right? So in your expense breakdown, you have to list every single debt that you have, right? Because this is a debt payoff strategy. And then here at the very end, you just kind of lump together your personal expenses: food, gas, insurance, anything that's not a debt that you know you'd have to pay for. Heck, you could pay for it with debt, but that's going to be a little bit different from the debt itself, right? So here, I'm gonna go ahead and copy and paste, right? We're gonna copy and paste this, and then here's kind of one of the most important mindset shifts you have to make is that you're not going to save money, right? So what we're going to do is, instead of saving money, we're going to use all of our debt to, I'm sorry, all of our money to attack debt, and then we're going to increase this cash flow number. So a lot of times people freak out like, you don't save any money, and like, if you look at my checking account, no. So the main difference between this column and this column is that here in this column, the final destination of our money, even after we have that, is our checking account, which is ridiculous, right? But here in this column, the final destination of our money is the line of credit. So that's really the main difference between here and here. Okay. And what's a line of credit? Well, basically, it's a financial tool where you could borrow money, pay it back, and then use it over and over again. So this is my $373,500 home equity line of credit, which means I could go to the bank's website, click a button, bam, they'll jump up to whatever limit that I have available. In this case, up to $373,500. And it's so easy. I just click a button on the bank's website, boom, it's right there. It's right there, right? So easy. So easy. Okay. All right. So, yeah. So we're gonna use that as our main operating account. And then we're gonna assume we have access to a $260,000 line of credit. Why 260? I don't know. I just made that up. But as you can see right here, I have many, many lines of credit. So I'm speaking from personal experience about how I got lines of credit. I have over 739,000. I'm pretty sure by next year it'll be a million. But even if I never get another line of credit, you know what that makes me? Top 0.01% of credit holders. Top 0.01%. And the way that I got it is I've actually found out the secret about who banks lend to like a couple years ago, which is they don't lend money to people who need it. Yeah, they don't lend money to people who need it. And so I just kind of like went to a bank when I didn't need money, and then bam, 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 $739,000 in lines of credit. Okay. So here's the thing. Why would we demonstrate that we would have a free and clear line of credit when we clearly need money here? Because I'm lazy and it makes the demonstration easier. And if you want to see a real life scenario, I have a real life scenario of 22 debts, um, with $4 left over under a 99-cent paywall. So this is just an excuse for you to pay me and join the YouTube memberships. Maybe. Okay, so let's just assume we have a free and clear line of credit. Now we have this thing called the cash flow index. So what is it? It's basically a formula where you get the balance of the debt divided by the monthly payment, and then okay, you scroll all the way down. Or I'm sorry, not scroll all the way down. You get the formula, and then essentially is a ranking system, right? So it's essentially a ranking system, and the way that it works is the lower the number, the more bang you get for your buck, which is why you want to pay it off, right? Whereas this high number here just means that if you pay this off first, you don't really get that much bang for your buck in terms of cash flow, right? So I can pay this $220,000 loan and get $927 back in my cash flow, or I could just simply pay this $30,000 credit card and get even more cash flow that back than my mortgage, right? So something that we have to be aware about. So think of this as a ranking system, okay? And so this is what I'm going to do. Let me just kind of show you here. So what we're going to do is take these 7 credit cards and then move it into a line of credit 5, 8, 15, 27, 30, 7, 10. And then that's $102,000, right? So I want to do this 102,000, $102,000. And guess what happens when we move that $102,000 into that line of credit? Well, all these payments go away and then we increase our cash flow, right? So it's 2 more. So now we went from $23.88 to $3,337.21 of cash flow. And then what you do is you put your entire paycheck into the line, take our expenses out, and then rinse and repeat over and over again. Okay. And then what we do is we take the previous month's balance plus the previous month's interest minus the cash flow. So 337.21. And then we do the interest. And let's see if I can really do this demonstration really quickly. I think I'm going really fast. 0.08 divided by 12. And then I'm going to do this. Okay. And then I'm just going to go ahead and copy and paste. And then we see right here, bam, 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 135. All of our credit cards are pay off. So let's go ahead and do that. Okay. And then 35 months, 102K. And then here, so let's go ahead and do this. We go to loan calculator right here. So it's month 35 right now. And then you just use the cash flow index again. So this is the lowest number. And then I move this into the line of credit, get that $320 of cash flow back. So let's go ahead and do this. And then this is going to be 7601.67. Okay. And then now we get the $320 of cash flow back. And then bam, 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 bam. And I know some of you might be thinking, whoa, you're going so quick. And my answer to that is it's what happens when you pay off a mortgage in 2 years and 9 months. Anyways, is everything a flex? Probably. I mean, I'll be honest, if you look at my channel in the very beginning, I probably cared more about teaching this stuff than I do now. And this is why, if you're looking for a teacher, you actually don't want someone who's too experienced. You want someone who is kind of learning it with you. But a lot of people, because they're lazy, they always want to look for the most experienced person, but the most experienced person would be like, why would I want to work with you? See how that works? Anyways, all right, so let's go ahead and do this right here, 37 months. And then it'd be 102 plus 17 119. All right, so now three more. Let's do this. Zero, oopsie, not this. So now what month are we at? We're at month 37. So I just type in 37 here, 37 here, and then I'll move this 22 grand into the line of credit. So if I do that, it's like student loan right there. And then this is going to be plus 22865.4. Okay. And then what we do is we add another $300 into our cash flow, 348. Look at that. Cash flow is $4,000. Bam, 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 bam. All right. So 4006.35 and 43 months. Okay. So 43 months. and then that's gonna be 11119 plus 30, so it's gonna be 149K, right? That's all good, 149K. And then in 43 months, what's the current balance of this one? So that'll be 43 or 43. And let's go ahead and get rid of this one. And I'll move that loan into the line of credit. How many minutes am I in? Ooh, 10 minutes. So let's see if I can do this in record time. So plus 42848.83. And then let's increase our cash flow by $600. And then now it's about 4,600. Okay. And then I'm going to do this right here. Control V. It's going to be minus 4672.47. Okay, 52 months. 52 months. And then this is going to be 149 plus 60. So that's going to be 209K. And then, okay, and then 30-year mortgage is left. So 52 months. Bam. All right, so now that's the only thing left. 199,000. And let's chunk it. So we can even use a 30% credit card to pay it off. Would we do that in real life? I don't know. It depends. I've actually used a credit card to pay my mortgage using plastique.com. I think they should sponsor me, but I think my channel will have to get a little bit bigger. And then I'm going to go ahead and ask all these credit card companies or credit lines to sponsor me. And then who knows if I can do it. That'd be pretty sweet if I could. That'll be pretty sweet. I doubt I will, but we'll see. 199,063.21. Anyways, this is a velocity banking calculator that I did not create. I got this from Renatus, and I actually resell their education. So if you want to know more about it and possibly get this, go ahead and click the Google form link below. Other than that, then if you not interested, I'm cool. All right, so let's go ahead and do this. So what's our expenses? Our expenses is 2,200, 2,200. And then what's our monthly income? So our monthly income is 7,800. And then we'll just do an $8,000 30% chunk. So 3.2 years. And then we just kind of just swipe with their credit card. And this is probably one of the best and easiest ways to increase your credit limit, in my opinion, which is like you just put 30% on that card and then just kind of pay it off over and over again. That'd be pretty sweet. Or we just use a line of credit, right? 8%. See how the interest paid was only $4,000, even when we went from 30 to 4. It's pretty crazy, right? So 3.2 years, that's the payoff time. I'm going to do this, and I'm going to do 52 divided by 12 plus 3.2, 7.53 years, and then we're debt free. That's right. That's right. All right. 13 minutes in. It's a world record. It's a world record in our debt fiesta. Debt payoff fiesta. Is that what I call it? Or debt free fiesta, actually. So, what I'm going to do afterwards, I might play some little bit more Zelda, hang out, and go to sleep. Because that's what happens when you pay off a mortgage in 2 years and 9 months. Oh, yeah. All right. Well, that's it for today, folks. Crane Lanta Mentorship. Have a great day, and I'll see you all in the next video.